much for having us and welcoming us to your show. My name's Kieron Osmotherley. I'm the founder and CEO of TowerXchange. We're a community of some 40,000 telecom tower industry leaders, and thus I'm sure we need no introduction as effectively your sister community. Our annual meeting of the top 250 decision makers in the African tower industry is meeting upstairs on the 5th floor for the next couple of days. So many thanks to Juanita and the team at FTTX Council for their efforts in coordinating these two important events. Do pop along to our registration desk on the 5th floor if you'd like to pop into our show. A quick introduction to TowerXchange. We've been following the telecom tower market for the last 8 years. Sub-Saharan Africa was the first market that we began studying. And we published the renowned TowerXchange journal, which now maintains an archive of some 4 million words of tower industry research, market studies, transaction histories, all the valuation benchmarks that you might need. So a quick run through the structure. I'll tell you a little bit about the tower industry, focus on the African market, and then speculate a little bit about the future convergence of the tower industry and the fiber industry. So the telecom tower industry was effectively inaugurated just 2.5 decades ago, and in that brief time, we've created a $330 billion global infrastructure asset class. 71% of the world's 4.66 million towers are now owned by a fragmented ecosystem of over 300 public and private tower companies, although it's a very top-heavy ecosystem. The top 15 tower companies, as shown on this graph, represent 60% of the world's towers. How this industry came about was fairly straightforward. To be candid, the mobile network operators didn't really prove to be that adept at maximizing infrastructure sharing between themselves as a function of barters and bilateral swaps, and indeed the even more challenging politically task of trying to inaugurate active infrastructure sharing. So this phenomenon of a specialist passive infrastructure tower company emerged, either pure-play independent tower companies of the likes of American Tower and Helios Towers, or this growing phenomenon for operators to carve out and keep their own tower companies, as is soon to be demonstrated by Telkom in South Africa with the creation of Gyro Towers. These tower companies have been formed to focus on the professionalization and the monetization of telecom's vertical real estate, macro towers and rooftops. And at the moment, there's almost an uncertain gap in the ecosystem in terms of responsibility for fiberizing those towers. So let's give you a very quick introduction to how a tower company drives revenue and capital growth. In very simple terms, they lease up their towers to multiple tenants. They lease extra space to existing tenants in what's called amendment revenue, and they build and buy additional towers. In Africa, they've also emerged to make a margin on power as a service as well. With those solid, long-term recurring contracted revenues comes a relatively fixed base of costs in terms of OPEX and CAPEX. And the tower companies have become increasingly capable at improving their operating margins through strategies such as leveraging monitoring systems and comprehensive asset registers to reduce the number of site visits required, or indeed by upgrading the power systems to enhance reliability while reducing total cost of ownership. So if in very simple terms, that's the raison d'etre of a tower company. The TowerCo business model generates positive, albeit single-digit return on investment when there's a single tenant on a tower. That return on investment rises to the low to mid 20% with a second tenant, and mid to low 30s with a third tenant. And remember, those additional tenants don't have to be 3 different customers. This could be next generation network overlays from the original anchor tenant. And what this gives you is a business model which generates very healthy revenues and very strong margins. The drivers of the transfer of tower assets from operators to tower companies are therefore as simple as helping the mobile network operator focus on its core business of selling minutes and megabytes, whilst at the same time exploiting the relative valuation arbitrage between the operator and the tower company. Mobile network operators might trade at 3 to 6 times EBITDA, tower companies at 8 to 25 times EBITDA. So we're literally in a situation where you take an asset from an operator's balance sheet to a tower company's balance sheet, and it can be worth 3 times as much as a function of that professionalization of sharing of infrastructure. The healthy valuations of tower companies also gives them access to low-cost capital, which gives them an ability to take on the capex burden to extend passive infrastructure networks. In the interest of time, I'll skip a few slides here. Let's look at the African tower landscape. There's around 158,000 towers in sub-Saharan Africa now, the largest markets being Nigeria and South Africa. They build around 8,000 to 10,000 new towers per year. Focusing on the South African market, it's actually one of the least penetrated markets by tower companies. Just 13.2% of South Africa's towers are owned by tower companies, but we're expecting that transition to transition fairly swiftly, both as a function of the entry into the market of Helios Towers, and more recently SBA Communications, one of the world's largest and wealthiest tower companies, which now owns South Africa's fastest growing tower company, Atlas Towers. So when Telkom carves out its tower company, Gyro Towers, the penetration of tower companies in South Africa will rise to just under 35%. Even though the legacy towers are still majority owned by the mobile network operators, a fairly significant majority of new build in South Africa is already being undertaken by tower companies, particularly those in the dense urban and suburban areas and along transport routes where many of you have your fibre. That said, at this point, just 10 to 20% of South Africa's towers in the capital regions of Joburg and Pretoria are currently fiberized, and there is a drive to run fibre to the tower at 50 to 75% of sites in the coming 5 years, which is going to be a critical enabler of 5G. If you want an illustration of the criticality of fibre to the tower, it's provided by India, where tower companies were in a very strong position. They owned about 2/3 of the country's towers, and yet when Reliance Jio leapfrogged to the 4G era and kind of blindsided a lot of stakeholders in the industry, they couldn't use the tower company towers because so few of them were fiberized and ended up having to build their own. So I think that kind of illustrates the criticality of forging partnerships between the fibre ecosystem and the tower ecosystem to enable not just 5G, but realize 4G. So again, in an effort to bring you back towards schedule, let me conclude by speculating a little bit about the future evolution of tower companies into holistic digital infrastructure companies. I mentioned that tower companies now own 71% of the world's towers, and the reality is that they're running out of investable cell sites that match their investment thesis, and that's prompting them to explore diversification of their business model. That said, tower companies remain wary of diluting their impressive valuations and conscious that it's difficult to replicate the margins, longevity and investability of their business model as they get outside of their comfort zone of macro towers and rooftops. Most tower companies are increasingly inclined to explore opportunities to buy, build, or lease communications infrastructure which has similar characteristics to towers. They like leasing shareable infrastructure with long-term contracts, low churn to investable counterparties. The vast majority of the 3.3 million cell sites that tower companies own worldwide will need to be fiberized, and that's even for 4G, never mind 5G, pressing towercos and fibercos into co-opetition. In some instances, this has prompted robust partnerships. As mentioned before, Helios and Vulatel and American Tower and Frogfoot have already exemplified this in the South African market. At a larger scale, some of the more innovative tower companies have been deploying impressive amounts of capital to acquire fibre. You've only got to look at North America, where Crown Castle has spent $13 billion acquiring 65,000 route miles of fibre, and a pending transaction coming from Digital Colony, which at its heart was originally a tower company, to acquire Zayo and their 130,000 route miles of fibre. I guess what I'm simply saying, ladies and gentlemen, is there is an ecosystem of telecommunications, virtual real estate, infrastructure enthusiasts. They're literally upstairs as we speak, and they are critical partners to you guys, the leaders of the horizontal communications infrastructure ecosystem. And I hope the next 2 days provide you with an opportunity to connect with some of your counterparts in that ecosystem. And once again, thank you very much for the opportunity to address you today.